No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
Capacity is becoming scarce. We are running on thin ice.
No one deliberately wants to go into battle, but we sleepwalk into conflict.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
All right, take a look at when it comes to Singapore. The big changes coming potentially. Overhauling its visa rules to attract foreign workers and ease a tight labor market that's contributing to wage and price pressures.
Yeah, let's get more and get over to the city itself. Today, Bloomberg's chief international correspondent for Southeast Asia, Jacinda Armin, of course, co-anchor next hour as well. Tell us about these key changes here first up.
Rich, to be sure, we have to talk about what it actually refers to. We're talking about the top talent, and by that we mean the top 5% of foreign talent in the Lion City. Now, for these people, they're earning at least $30,000. That is Sing dollars. That's 21.5 grand, and they'll be given a 5-year pass instead of the previous 2 to 3 years. They'll be allowed to work in more than just one company, and of course, their dependents will be given the opportunity to work, unlike previously. So it is quite an improvement from previously, because there have been rumblings on the ground about how it's been so difficult to get clarity how long you can work, whether their dependents, their spouses can also get jobs in the Lion City. Well, that's being addressed. And come September 2023, what they're also changing is that those who are in the other areas like sports, the arts, academia, they are also allowed to apply for that 5-year visa if they're seen to be the top 5 or 10% of the industry they're in. So to be clear, it is actually targeting the top talent in the Lion City, allows them to compete with the likes of the UAE, the likes of the UK, the likes of Germany, and of course, they didn't mention this, the likes of Hong Kong as well.
Well, yeah, I was going to say, Hong Kong's the big one here. But yeah, you guys only want the best of the best.
Exactly.
Only the exceptional candidates.
But who wouldn't want that, though?
I know, right?
Yeah, and we want the very worst.
But yeah, certainly, mentioned pretty big changes there.
Has seen about 6 minutes or thereabouts. To Armin there joining us there from Singapore itself. Labour market reforms taking place, visa reforms anyway.
Filling the gaps, they say.
Correct.
All right, taking a look at markets here. Can't really fill the gaps here because there's still a lot of lingering questions about the Fed. You are seeing, there's some markets, mixed across equities. Jakarta is still looking good, so is New Zealand. But then again, look at Hong Kong, we're 1% or more lower here. Commodities, once again, are seeing a bit of pain. The dollar story, 20-year highs for the dollar. Continue to see that pain across Asia FX here today, with the exception of the ringgit. That's probably the only one that's kind of being flat here this morning.
Okay, well, just to say that we will be listening in about 4 or 5 minutes. I will anyway. We're going to be talking to the CEO of Woodside Petroleum. That's on the way. A lot more. This is Bloomberg.
VK ฟินฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Apple has identified its next big business, bringing advertisements to more parts of your iPhone. Today, Apple pushes ads in 3 places: the App Store, Apple News, and the Stocks app. In the News and Stocks apps, Apple shows display advertisements. That means that third-party companies like car dealerships or mortgage lenders can showcase their advertisements just like they can on a website. On the App Store, the situation is different. There, Apple has search ads. This allows developers to buy their way into showing up higher on search results. For instance, an App Store developer can bid for the term car racing or basketball so their apps would surface above competing apps in the list of results. Apple's push into ads is a little ironic, given that its ATT, or App Tracking Transparency Privacy feature, limits the ability for Meta, Snap, and even smaller developers to generate as much revenue as possible from advertising. That's because the feature allows users to choose if they want their data collected and tracked across third-party apps and websites. Still, Apple's hoping to expand its own ads business and is planning to add search ads to its Maps app. Other areas where ads could eventually appear are on Apple Books and Apple Podcasts, along, maybe one day, with an ad-supported tier of Apple TV Plus to compete with new offerings from Netflix and other streaming video providers. I'm Mark Gurman. This is Power On.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
We make it very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much like the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto, the people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. From the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Katie Greifeld in New York, in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, Musk's latest subpoena, the whistleblower who used to run Twitter security. He says the company has been incompetent with bots and privacy. Is that enough to sway the court's opinion? We'll discuss. Plus, the tech industry's most prestigious business incubator, Y Combinator, has named its first Asian American CEO. I'll chat with Gary Tan about what to expect under his leadership. And Bitcoin falls below 20,000 as investors respond to the Fed's hawkish stance. So how will the world's largest crypto perform during a recession? We'll try to answer that question. But first, let's get a look at the markets. And after that big drawdown that we saw on Friday, calm down a little bit in terms of losses, but still decidedly risk off. You look at the S&P 500, you look at the NASDAQ 100, both firmly in the red, and those chips once again underperforming. The Philadelphia Semiconductor Index off by almost 2%. On top of that, you did see two-year Treasury yields rise a little bit as investors tried to recalibrate some of their Fed bets. But let's talk about Bitcoin. This is interesting. We're once again talking about 20,000. You can see during the summer, we kind of broke above it a little bit, but we know crypto and Bitcoin in particular tends to move in 10K increments. That's why you see sort of a staircase pattern on the chart behind me. So with us back at 20K on Bitcoin, are we going to 30 or are we going to 10? We're going to try to answer that question, but let's also check in on the meme trade, because that's really been sort of one of the narratives that's emerged over the last few weeks, seemingly out of nowhere. It continued today. You saw some of the speculative corners of the crypto market, the miners up there posting some gains. Then once again, you had Bed Bath & Beyond just crushing it, up almost 25%. And some of the originals too, you had GameStop notching gains of about 2% on a down day in the broader markets. But speaking of memes, let's listen to how some of the Bloomberg television guests are reacting to this moment.
Memes come and go quickly. Same thing goes with these prices.
Volatility down, stock market up, a perfect precondition for some more meme stock action.
Towards the very, very big picture, there's a price discovery and market efficiency and all sorts of things that do adhere to fundamentals a little bit more.
GameStop has been steady. And so the interest there from the retail world has maintained better than some of the other stocks. Bed Bath & Beyond, I think there's probably a lot of factors at play here.
GameStop is still not sustainable at the price that it's at if you use fundamental analysis.
For leadership to be, maintained in those areas, we wouldn't think that's sustainable moving forward.
So we've seen a turn both in terms of the general market environment and in terms of people interested in, once again, playing equities, getting involved in capital markets. And the two of those things together, I think, explain why we're seeing a little bit of a meme stock resurgence.
Let's get more from Bloomberg's Bailey Lipschultz. He joins us on the phone. And Bailey, actually the Markets Live blog over at Bloomberg News just ran a survey on this topic. Will the meme mania fizzle out? Almost 2/3 said no. So let's start simple. Why?
Katie, I think it's a combination of factors, like some of the guests for Bloomberg TV mentioned, is just that you have fee-free trading applications like Robinhood. You have the ability now for retail traders to buy far out of the money call options. You also just have the sense of camaraderie and really community that platforms like Reddit and StockTwits have founded. So when you look at it, kind of the confluence of those kind of factors, you see it continue to pop up here and there, and that's something that we saw most recently last week with Bed Bath & Beyond in particular, but that really does date back to even the Hertz days of late 2019 when this trend of retail traders kind of picking up the ability to trade kind of came into vogue.
And Billy, if I think about the last 2 years of living through and reporting on this sort of meme craze that still is continuing in markets, these stocks used to sort of trade as a block. If one was up, you could bet the other was up. You could sort of see a little bit of a break apart here now, though. Are we starting to see any sort of fundamental stories return to some of these names?
I wouldn't say it's fundamentals. The more investors I talk to and strategists is that each has their own story, and that's really what we saw play out in the summer of last year. When you look at it, GameStop obviously kind of lifted all boats, was the tide that lifted all boats back in January of 2021, but then AMC really caught fire in the early June, late May area when CEO Adam Aron embraced retail trading. Then you saw that kind of play out with Bed Bath & Beyond with its own wave with Ryan Cohen's stake, which he has subsequently dumped. So really you're looking at it where there's not really fundamental reasons for these rallies, but Bed Bath & Beyond is set to give a strategic update on Wednesday. So that's another event for speculative investors to play, which is something we saw play out today in particular with call options on Bed Bath & kind of by itself.
Well, let's dig into Bed Bath & Beyond, because actually one of the questions in this survey was which stocks of these will go bankrupt within a year. You had GameStop, Bed Bath & Beyond, and AMC. 45% expect Bed Bath & Beyond to go bankrupt within the next year. What are we expecting to hear on Wednesday?
The big focus was laid out by Morgan Stanley. What they're looking for are comments on cash burn. This is a company that's been continuing to burn cash in the last few years, dwindling its cash position down from over $1 billion at one point a year ago to now closer to $100 million. So looking for cash burn, comments around vendor support, because we have seen that Bloomberg report from about 2 weeks ago that maybe they weren't getting goods supplied because they were running back on payment. And another thing is just looking at current trends going into the holiday season. This is really, according to Wall Street analysts, a make or break stretch for Bed Bath & Beyond going into the fourth quarter, and what that could mean for a company that really, when you look at it from a fundamental basis, is kind of nearing the end of, at least according to some, what could be a potential light.
Make or break stretch. Definitely watching with bated breath. But Bailey, I know you also cover SPACs in addition to memes. And when I think about SPACs and memes and crypto, it sort of all boils down to that same speculative urge driving these bets, at least in my view. Is that fair, though? Is it fair to lump SPACs in with some of these meme names?
It really depends. Obviously, when you look at the SPAC trade that played out, when you go back to Virgin Galactic in 2019, turning into drafting early 2021, which really set the stage for the craze where pretty much any celebrity or investing kind of titan had a SPAC in some way, shape, or form. It just kind of caught the enthusiasm and energy of a market that seemingly was a bull market that could not run out of gas. And that really is why I think when I talked to some of my sources, SPACs got caught up with meme stocks, again, with some of these alternative cryptocurrencies, because there was so much froth in the market that it was able to have some of these speculative corners of the market really kind of go mainstream and be adopted by professional traders as well as retail investors.
Bailey Lipschultz, Bloomberg News. Thank you so much. Really appreciate your time. Coming up, how startups can change their strategy to raise capital in the current environment. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Big, expensive cities have a lot going for them. But if you live in one, you've probably noticed that these big, expensive cities keep getting more, well, expensive. You could always move away. You might have just started working remotely, so there's really nothing keeping you there. But then again, moving is a hassle. Well, what if someone paid you 10 grand to do it? What if they threw in free office space, a bicycle, or a gym membership? Programs in cities and states around the US are doing exactly that, and they're getting a lot of interest.
We've had over 50,000 applications.
About 90,000 applications.
We've had over 1,800 applicants from all over North America.
So are these nascent programs actually beneficial to their communities and the workers joining them? Or are they little more than flashy advertising campaigns for places looking for an injection of fresh talent?
Case of cryptocurrencies today, I think it's now's the time to get in, it's good, or now's the time to wait to see where the market's going?
The biggest thing I would say is don't put in more than you're, fine losing.
Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. The Federal Open Market Committee's overarching focus right now is to bring inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The burdens of high inflation fall heaviest on those who are least able to bear them. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job is done.
And that hawkishness from Fed Chair Jerome Powell just crushing the risk-on mood that we've seen from markets in recent weeks. And of course, that shift in sentiment does not bode well for fund-ups seeking funding. Here to discuss is Christina Ross. She is CEO of the financial software startup Cube. Christina, you recently raised $30 million for your Series B funding round earlier this summer. Obviously, that's a much different environment than your Series A round from just a couple of years ago. Compare and contrast the difficulty.
So our Series A was about 18 months prior. So it was end of 2020, beginning of 2021. And that was really the beginning of the party. So this was the time when unicorns were being crowned nearly every other day. It was the world of endless capital without guardrails. And we've now moved into a world where certainly the sentiment has changed, but we're going back to good old-fashioned business fundamentals. So for us in particular, we are a planning company and we did plan for this. And our business model is really lends itself well to both good times and bad. So when times are good, we're a sword in the sense that companies need to allocate capital in the most effective way possible. That's actually harder to do than it looks if you think about all of the companies out there that have blown billions of dollars. And then when times are challenging, it's really about extending runway. So we like to say, while cash is king, runway is queen. And we help companies to do just that.
Runway is queen. I'm going to write that down and use that. But this $30 million that you raised in your Series B, what are you spending the proceeds on right now? And is that different than what you might have planned to spend it on had this sort of risk-off vibe rippled its way through asset classes?
We would have definitely been more aggressive in our go-forward growth targets. So there was almost a joke going around the startup ecosystem last year of 6 to 8x is the new 3x, meaning companies are going to grow 700-800% year over year, which is what VCs are expecting. 3x, of course, was sort of the gold standard for growth. What we're now hearing in terms of sentiment is 3 years is the new 3x. So going back to how we're spending this capital, we're looking at extending runway for a longer period of time, rather than growing aggressively to the point of maybe putting ourselves in a position that growth is difficult to achieve or maintain. So I would say that is definitely something different than the world of 2021, but we are in a really great position to get to either a path to profitability or extend our runway as long as possible.
I'd love to expand on that a little bit. How do you expand your runway in a market environment such as this one?
So going back to core business fundamentals, every company, especially a tech company, has to think about how much they're willing and ready to invest in R&D. And for us and our investors and for our customers, this is an area that's really important and we don't want to pull back. We could certainly get to profitability faster if we pull back on R&D because that doesn't generate immediate revenue, but is more of an investment in the future. Where it comes down to us is really solid execution around our go-to-market. So that means we're looking at a lot of predictive measures around how well our go-to-market is performing. So we look at things like magic number, which is how much we're spending each quarter versus how much revenue it's generating in the following quarter. And a good or best business practice is for that magic number to be somewhere between 0.75 and 1. And that's something we're doing to extend runway so that we're very efficient with the capital we use. And one of my favorite sort of business, coaching lines actually came from the Netflix show Cheer, which when the coach was saying, it's not about what the other teams are doing, it's what we do here on the mat. And for us in our company internally, it's about how we execute internally and how efficient and effective we are at leveraging the capital that we already have.
That show made me feel so inferior, but I'm glad that you pulled something away from it. But Christina, as someone who recently went through fundraising, who recently worked with VCs, I'd love to hear your perspective on what's top of mind for those VCs right now. What are they looking for in potential investments?
First of all, it's good old-fashioned business fundamentals. And I'm a former CFO, so I love to hear it. I love going back to basics. The numbers that are really top of mind for most investors today are your gross and net dollar retention. So great, you get customers, but how well are you retaining them and growing them? That's the most effective use of capital. How quickly and effectively are you growing? Some of those terms like magic number, so a lot of the things around go-to-market fundamentals. And more importantly, of course, I haven't mentioned cash yet, but your burn rate and your burn ratio. So how well are you using the cash that you already have to generate either additional growth or moving towards profitability? So one of my favorite metrics is the rule of 40, which looks at how much profit you have versus how much growth, and trying to get to or above the number 40 or 40%.
And so if you were to give an advice to a startup who is trying to attract funding right now, who is trying to capture the attention of some of those VCs, what advice would you give them to sort of tailor their strategy in this environment?
So right now, what I'm hearing is most startups are not advised to raise right this second. If you can extend runway, that's not just going to be, through business fundamentals, but also looking at other external sources like debt. So if you can't raise equity, look for a line of credit or another way to extend runway. Maybe reducing burn, whether it's reducing your growth rate or reducing the amount of R&D, depending on the type of business you're in, are just ways to extend capital till we get out of, I would say, till we know a little bit more of when we hit the bottom of the market, or at least when investors are confident enough to start really investing heavily again.
Debt is cheaper than equity. I've heard that one before. Cube CEO Christina Ross, great to spend some time with you. Really appreciate it. Coming up, the U.S. and China are near a deal to avoid stock delistings. How might it impact your portfolio? We'll find out. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
the U.S. and China are nearing a deal to avoid mass delistings over audit supervision. This agreement lets American auditors go to Hong Kong to check the records of Chinese companies listed in New York. But if the agreement falls through, more than 200 U.S.-listed Chinese companies face delistings from American stock exchanges starting in early 2024. Here to discuss his strategy risks, founder and CEO Isaac Stone-Fish. Isaac, great to have you with us. In your view, how likely is it that this agreement actually goes through?
I think it's very likely that the agreement will go through. What I'm more uncertain about is whether it will solve what the U.S. government wants it to solve, namely equal treatment for Chinese companies and U.S. companies and other global companies, and whether or not it will actually stem the tide of worsening U.S.-China relations, which seem increasingly likely to lead to all-out conflict or war.
And do you think such big hurdles such as that could ever be solved? Is there any agreement that could go through that would satisfy all of those requirements?
No.
No. Okay. Well, let's talk about the ramifications here. If this doesn't, of course, this agreement, like you're saying, doesn't go far enough in your view, but if it doesn't go through at all, what are the ramifications of that? What is actually at stake here?
It seems what the Chinese side is doing is buying time. There still are roughly 18 months or so until the companies would have to delist. I think probably the idea is we'll sign this, the U.S. side will try to implement it, they'll find a lot of stonewalling on the Chinese side, and by 2024, things will be different enough that we'll be able to keep moving the goalposts and keep pushing the can down the road and figure something out then. It doesn't feel like this is a very big concession. It feels like this is a very good stalling technique so that companies on both sides and investors on both sides don't see Beijing communicating that they're not really open for business.
So if that's the future we're looking forward to, that the goalposts just continue to move forward, just a series of stalling techniques, do you think that we'll ever actually see these delistings go through?
It's a great question. I think the question of whether or not these companies will delist will depend so much more on the macro environment at the time. So we saw significant delistings earlier in the month from several large SOEs, presumably because they didn't want any U.S.-linked auditors anywhere near their books. I think it's possible that if U.S.-China relations worsen, certain companies will delist, maybe not even because of this, but because of other considerations. And I think certainly a lot of promising Chinese companies are finding it less appealing to list on U.S. markets and are looking closer to home for their capital raises.
So why is that? Why is listing on U.S. exchanges maybe not the holy grail or the big goal that it might have once been?
A lot of it is Beijing and the Chinese Communist Party is increasing paranoia about data and data security. And a lot of folks believe this has to do with Beijing really fearing that the U.S. is going to go to war with China against Taiwan if Beijing were to seize the island. And national security is really coming into the forefront. There's an expression in China that in China politics dominates. And I think we're seeing that not only with domestic politics, but really with foreign policy and national security as a major, major force driving Beijing's decisions.
Isaac, who has more to lose here if we make it sort of a binary conversation? I mean, is it more important for a Chinese company to list on a U.S. exchange, or is it more important for that U.S. exchange to have those Chinese companies?
That's a great question. I think it's pretty even. I think from a broader perspective, it's investors who lose because of less choice, less efficient markets. And really what we're seeing on both sides is the US and China prioritizing national security. And that's what governments do. And that's what investors often don't like governments to do. But that's really the new reality, the new base case for US-China relations. So investors thinking about various equities should really have a national security strategy in mind as they make decisions.
And Isaac, going with your expectation that really we just continue to stall and stall, what do you think could happen along the way in terms of the Chinese tech crackdown, for example? Do we expect to see delistings, even if not forced to, for example?
I think that's really possible. And I think one thing investors have to keep an eye out is both Beijing and the US is worried about US companies in China and Chinese companies in America. So if, for example, this seems to move forward and then there's some corruption allegations against a Chinese company on the US exchange, Beijing could retaliate against an American company in China. It's also possible that investors start to feel like the markets in the other country are a lot less appealing and the governments respond accordingly. I do feel like there's a lot of people with large positions in China who want you to believe that this is business as normal, and it's really not. And Beijing has been very explicit about that. So this, to me, is not the key signal. This is part of the noise.
All right, Isaac, we have to leave it there. Really appreciate your time, though. That is Strategy Risk's founder and CEO, Isaac Stonefish. Coming up, Twitter's whistleblower, now subpoenaed by Elon Musk's team. What that means for the rest of the trial, next. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. From servers to software to the cloud and beyond, HPE is transforming its business, and Tarek Robiati is central to the task.
Gone are the days where the CFO is just a scorekeeper. Our role as CFOs is to assist the CEO change the score.
Chief Future Officer, Wednesday on Bloomberg. Brought to you by Workday.
let's move on to the Musk Twitter drama now, with the Twitter whistleblower now subpoenaed by Elon Musk's lawyer. That whistleblower, Peter Zatko, claims Twitter officials didn't know or care to find out how many of its accounts were spam and bot accounts. Let's bring in Bloomberg's Kurt Wagner for more on that. And Kurt, the argument that has been made is that Zatko's claims could help Elon Musk actually walk away from this deal over those spam accounts. Does that theory hold water?
You know, I think it's a little more complicated than that, right? I mean, what the whistleblowers basically said was that Twitter has not done a good job with security and also not a good job with identifying how many bots are on the service. And when he says that, he's really meaning in total, right? How many of all the accounts that are on there, how many are bots? He claims that Twitter has no idea. Now, where it gets a little bit more complicated is that Twitter's argument has long been that, hey, it's fewer than 5% of the accounts that we, count as monthly active users and share with Wall Street, right? So they're kind of talking about two different things here. What I do think matters here is that this whistleblower is a top senior executive at the company, reported directly to the CEO, who basically is painting a picture of a company who's, mismanaged and not taking these issues seriously, right? So whether or not the data he has is going to help Elon Musk, I think he's painting a picture of a company that hasn't taken the bot issue nearly as seriously as Twitter wants you to believe it has.
And theoretically, Zatko would know, but is there any world in which this subpoena could actually backfire on Elon Musk?
I mean, sure, if he goes and starts answering a bunch of questions that basically confirm that even though maybe Twitter doesn't know how many bots are total on the service, they're making their best guess, right? They're doing the best that they can to create this number that they share with investors. That's really all Twitter has to do and has been saying that they've been doing for years, right? Is they are doing their best to calculate this stuff. So if for some reason he comes out and some of these answers start to show that Twitter did put some thought into this and did handle this in the best way possible for investors, certainly that seems to, in my opinion, defend Twitter's argument a little bit here.
Well, let's talk a little bit more about the Twitter side. How would you expect Twitter to respond to this subpoena?
Well, they declined to comment on the subpoena specifically. I imagine that they too are very interested to hear what Zatko is about to say. They have subpoenaed a bunch of people, and I'm sure that they would love to ask some questions of him themselves. But they have since come out and said that everything that he said in this whistleblower complaint is false. They said it was mischaracterized. All the things that you would expect a company to say to someone like this. And so again, no comment specifically on his subpoena today, but they're clearly, unhappy with what he shared thus far and claim that it is not accurate.
And Kurt, I know that you are living and breathing this case, but for the rest of us, what should we keep an eye on next?
Yeah, well, there is going to be a shareholder vote in a few weeks, and it feels a bit like a formality, but I think it's an important one, right? Because this feels sort of like the last hurdle that Twitter has to really clear to show that they have done everything in their power to make this deal happen. And so that's going to happen, I believe it's on September the 13th, so in just a few weeks. And again, if shareholders come and approve of this deal, then it's kind of, Twitter can say, hey, look, we've done everything we said we were going to do. We'll see you in court. So I think that that's a big moment that's coming up just after the holiday.
All right, plenty to keep an eye on. Bloomberg's Kurt Wagner, thank you so much. Really appreciate it. Coming up, as crypto follows the sharp adjustment in U.S. stocks, where is it headed and what does it mean for institutional interest in the space? We'll discuss next. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
We make it very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much like the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Time now for our crypto report, and Bitcoin still hovering around $20,000. This is risk appetite wavering following Fed Chair Jerome Powell's speech on Friday, stressing that interest rates may have to stay elevated to stamp out inflation. Let's bring in blockchain capital partner Kinjal Shah for her read on this. Kinjal, great to have you with us. At this point, how much is Bitcoin and the crypto space broadly just a macro trade?
Thanks for having me. You know, I think Bitcoin and the crypto markets more broadly have certainly expanded into broader tech over this last cycle. And I think we're starting to see that get reflected when it comes to macro comments coming from Jerome Powell and sort of the general market sentiment tending to sort of edge away from risk. I don't know if that's going to continue for the long term, but it certainly is, I think, a result of how the markets have behaved in the past 24 months.
We also have crypto contributor Sonali Basak on set with us. Sonali, it definitely feels like Fed Chair Jerome Powell spoke and crypto listened.
Crypto did listen, even though it's trading lower than where it was a week ago, Katie. You do have that lift back up just a little bit today in the last 24 hours. Kinjal, if you look at what's happening here, of course the macro is driving so much of the story, but there's also some single name events when you look at a lot of the tokens that are trading, Ethereum being one of them. When you see what happens to Avalanche on the downside, some news over the weekend driving the price a lot lower. How much do the fundamentals matter here?
You know, I think there are going to be short-term narrative-driven, moments, as there are with any sort of equity or asset class more broadly. However, the fundamentals, I think, continue to matter. I think that the long-term investor is still paying attention to the fundamentals, and that's really going to be driving a lot of investment.
As far as investment goes, then, how much are you thinking about valuation? There's a lot of question about whether Ethereum just has a lot more room to run, given that run-up in Bitcoin we've seen over the last several years. Is that something that you believe, or do you believe that the merge can create some more complications ahead?
I think the merge is a really big milestone for the Ethereum ecosystem. This transition, I think, is going to have a lot of ramifications, whether that's related to institutions being able to, allocate to Ethereum more heavily than they have in the past, as well as certain fundamentals around the issuance of Ethereum itself. I think this is going to be a really big milestone. It's unclear if that's being sort of reflected in the price of Ethereum today. That's something I certainly don't
don't have the ability to sort of see into, but certainly think it's going to be a big part of the discussion in the next 6 months.
Kendall, I want to talk more about institutions in the crypto space, because a narrative that I've picked up on over the past few months is that this big volatility, this really dramatic drawdown that we've seen across the crypto landscape is going to scare off some more of those traditional players, those big institutional players. Has that been your sense as well?
My sense is that a lot of institutions and enterprises more broadly have been getting really smart on crypto assets more broadly and are using this time as a way to implement strategies and sort of figure out exactly what role they want to play in these markets. Even today, we heard an announcement from Meta announcing the ability to post your NFTs across Instagram. I think that's a big sort of strategic move that's been in play for a number of months. And I think we'll see similar reflection on the institutional side as they've been putting sort of the pieces in place into what that looks like.
Well, Kinjal, speaking of Meta, if I think back to this time last year, or even 6 months ago, I was hearing a lot about the metaverse. I was hearing a lot about Web3. It feels like those conversations have sort of petered off as we've seen this big market volatility. When are we going to start to see a rejuvenation in that space? Does that ultimately tie back to what the Federal Reserve is going to do?
Yeah, it's difficult to know exactly when sort of markets will come back to life. However, I will say that founders and teams continue to build in the Web3 space as well as the metaverse. There are a lot of really interesting projects that have been funded over the past 12 months that we're going to start to see execute and ship on their roadmaps. And I think we'll start to see some great engagement and use cases really come to light over the next year and a half.
Well, there's also just a lot of dry powder on the sidelines when you look at how much money has been raised in the venture capital industry. Is there an opportunity now that valuations seem to be stabilizing a little more? They've come down quite a bit. Where are you placing your bets?
Yeah, we continue to think at Blockchain Capital that this is one of the most opportune periods to engage with bright founders that are really focused on the long term. We're doubling down on infrastructure, I think, as a really key theme for us, whether that relates to scaling existing blockchains, privacy more broadly, powering consumer use cases. I think infrastructure is a really interesting space to be in right now and something that we're spending a lot of time on.
I'm curious about some of the existing companies that you've placed your bets on over time. We're seeing some really interesting changes here in what some of them are doing. Think about Coinbase, for example, and how it says that more customers will be using its staking services. I'm curious as to how consumers are going to be interacting with some of these companies differently as we look to what crypto looks like coming out of this most recent winter.
Yeah, I think companies like Coinbase are really trying to put their users in the best position given the market changes. So as staking becomes more of a mainstream use case, enabling their millions of users to be able to get access to those products, I think is a really big value prop for folks like Coinbase or other exchanges that have that ability in their product suite. On the other hand, we're seeing entry points for retail users really proliferate across the open protocol ecosystem, whether that's using DeFi protocols or more consumer-oriented NFT communities. I think everyone's entry point into Web3 looks a little bit different right now, and so really trying to ensure that there's a place and a use case for everyone.
And when it comes to Web3, I mean, I'm just fascinated by the idea of the internet on the blockchain. And I've heard it both ways, that you could see some of these TradFi players come in, some of these more traditional companies that aren't necessarily crypto native come in and build Web3. I've also heard the case that, no, it has to be someone who's native to the crypto industry. Where do you fall on that debate? And when you think about your own bets that you're placing, I mean, are you more likely to invest in a crypto native company or maybe someone with a little bit more experience coming from the realms of traditional finance?
I think every company is its own sort of use case to think through. However, I will say there is a certain something special that comes from being crypto native and really solving for pain points that you're seeing within this ecosystem. crypto and Web3 more broadly is very focused around grassroots organization and community, really giving ownership back to the users of the products that we see. And so I think being crypto native is really important to the ethos of how you can build a product in crypto and how that really can scale over time. That's not to say that financial institutions and sort of Web2 companies won't be able to build some really great products and ideas in the crypto space. But I will say that being digital and crypto native is certainly, I think, a unique advantage.
And I'll put another question to you along those lines. When you're invested in everything from Uniswap and SushiSwap to Coinbase and Kraken, centralized or decentralized, which is the way of the future?
It really is a spectrum. It's certainly not a black or white question in terms of, whether the world is going to look completely centralized or decentralized. And I think that's something that's really become clearer and clearer over the past few years. At Blockchain Capital and more broadly thinking about the market, we really want to back founders and products that are solving for customer pain points and for real problems that they're facing in the market. And I think that's going to continue to exist on the spectrum.
Blockchain Capital partner Kinjal Shah and Bloomberg's own Shonali Bassett. Great discussion. Thank you both so much. Coming up, we're going to speak to Initialized Capital founder Gary Tan. He's coming back to Y Combinator. More on that big news next. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Big, expensive cities have a lot going for them. But if you live in one, you've probably noticed that these big, expensive cities keep getting more, expensive. You could always move away. You might have just started working remotely, so there's really nothing keeping you there. But then again, moving is a hassle. Well, what if someone paid you 10 grand to do it? What if they threw in free office space, a bicycle, or a gym membership? Programs in cities and states around the US are doing exactly that, and they're getting a lot of interest.
We've had over 50,000 applications.
About 90,000 applications.
We've had over 1,800 applicants from all over North America.
So are these nascent programs actually beneficial to their communities and the workers joining them? Or are they little more than flashy advertising campaigns for places looking for an injection of fresh talent?
Politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Gary Tan, one of the founders of Y Combinator and currently the managing partner at Initialized Capital, will come back to Y Combinator as its president and CEO early next year. He will also be the firm's first Asian American chief. Gary Tan, I'm pleased to say, joins us now for more on this news. And Gary, in many ways, this is a homecoming. What brought you back to Y Combinator?
For me, Y Combinator is truly sort of the beacon for opportunity. And, for me, growing up, tech gave me everything in my life. I started my life actually as a child of Chinese immigrants and, sometimes food insecure. We were sometimes, we were in 1-bedroom, 2-bedroom apartments. I got my first job making web pages, and that helped me pay for the down payment for their home. And I just remember going to ycombinator.com/apply and putting down what my idea was. And they met me, they gave me an interview, they funded me, they put me in this community, and that community changed my life. And so at the end of the day, I just know that that is what we can keep doing for thousands more people, possibly way more than that. And that's really the goal. That's why, YC gave me so much, and, I want to give back.
So you start early next year as president and CEO. What's top of your priority list if you had to pick?
One of the things that has been incredible for me that, I want people to know out there, YC is a place where the alumni help each other in such a fundamental way. And I'll tell you a story of when I was in YC in summer of 2008. There's a company that most tech people know called Heroku that, they were on their way. They did, of course, go on to get acquired by Salesforce, and it was great, one of the biggest exits at the time for Y Combinator. But I remember those founders coming and telling me, hey, this is how you raise your seed round. This is how you actually do it. And they gave us their secrets. They said what they said in those conversations, and they gave us the words to do it. 6 months later, we were running one of the biggest Rails websites on the planet called Postgres, and they wanted our source code because they said, well, we're a hosting service for Rails, and we need to be able to handle, the biggest website. And, normally in technology, nobody would ever do that. Like, the source code is your crown jewels. But we said, you know what, here it is, and we helped them. And, that's the kind of thing that happens every single day. Like, these aren't stories or, access to information that you can get at a conference or, sitting next to someone, even, at the top business schools. Like, this is really advice and resources from people who are the best in the game. And you can just apply online, and anyone has access to it. So that, that is still super unique and so powerful in the world.
And Gary, of course, you are Y Combinator's first Asian American CEO. And when you're seeking to fund VC founders, how important will diversity be for you?
At the end of the day, at Initialized, I'm super excited about Jen Wolfe and Brett Gibson sort of stepping into the roles of managing partner at Initialized. And I really have to just recognize Jen Wolfe as a true leader in sort of bringing diversity to, even actually the fund itself. Initialized is actually the second most diverse fund in the world, according to the information. And, at the end of the day, what is investing about, if not trying to build the world that we want to live in?
And well, Gary, talking about the world that we currently live in, the markets have seen just incredible volatility over the past few months. We heard from Jerome Powell on Friday, sparking even more volatility. If you think about this period of higher interest rates that we're heading into, how has that affected sort of the startup world and some of the investments you could be funding?
I think one of the very lucky things about just early stage investing period is if you look at these times of great crisis, really great work is done. So, when people thought the web was deader than dead, that's when Facebook was created. When people thought, and actually I was in the least successful Y Combinator batch of summer 2008 because Lehman died.
I remember that.
Which was crazy. And, friends of mine now, Brian Chesky and Joe Gebbia and Nathan Blatharchik, actually, they went through Airbnb, they went through Y Combinator with Airbnb the year after. And that was the batch where Paul Graham said, you know what, there might not be a demo day because there might not be any investors. So the blessing is, whether it's a good economy or a bad economy, if you pick a problem space that's real, if you can use technology to attack really big markets, those are actually the times when some of the biggest opportunities present themselves. And so, rain or shine, I think YC in early stage, it's, things have adjusted a little bit. They've slowed down a little bit, but this is good, this is healthy, and it's good for the ecosystem.
Well, let's move beyond some of the early stage investments. I would love to get your thoughts on the IPO market because it's really dried up over the summer. When could we start to see some of those companies coming public?
Well, it's like Warren Buffett says, right? These things are in the short term popularity contests, and in the long term, they're weighing machines. And when you're talking about IPOs, well, the weighing machine is not willing to give multiples that a lot of people want. It's hard for me to predict, to be frank, when this will happen, because it's sort of separate from sort of the day-to-day of these startups, which I know really well. I really hope that a lot of the macro sort of situation resolves itself, and that I think there are a lot of indicators out there that say that inflation is over, but I'm not exactly the right person to pay attention to there. What we can do is tell our early stage and growth stage founders, be thoughtful about your cash, build something of true value, and don't build something for just that next round or to be able to sort of impress that next VC. It's really about impressing your customer, your user, high retention, high gross margin, and great customer acquisition cost versus LTV. That's the fundamentals, and that's what we try and teach every day in and day out early.
Gary, it is great to get some time with you. That, of course, is Gary Tan. He is Initialized Capital founder and partner, and soon to be Y Combinator president and CEO. Thank you so much. That does it for this edition of Bloomberg Technology. Tuesday, we're going to speak to Coursera's CEO to discuss growth in education technology. And don't forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
So the inflation environment has been changing a little bit. Inflation's been very low for 25 years. Now people think inflation's coming back. How are you going to deal with that?
I think many of the tools that we've historically used to battle inflation no longer work in the same ways they used to. I think people oftentimes thought of housing as a way, or especially retail and real estate as a way to hedge against inflation. Less and less possible the way we've invested in it. I think commodities similarly have been thought of as a way to hedge against inflation. There are challenges over the long term. Equities have been a hedge against inflation. We will continue to do what we have done in the past, which is build a diversified portfolio where there are many different opportunities that have the possibility of hedging against inflation, because different types of inflation have to be hedged in different ways. So if it's a very quick increase of inflation as opposed to a slow rise of inflation, is it temporary? Is it a long and a persistent type of inflation? So for us, I never model myself an economist that can predict where inflation is going. And so what I need to do is build a diversified portfolio where there are different options that can fight the different types of inflation, and to pay close attention to it. And fundamentally, it's done through the equity markets.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of a solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
What is your base case for Italy in terms of what happens politically and then what the economic fallout is?
This is Bloomberg Daybreak Middle East. Our top stories this morning.
U.S. stocks fall again, taking the S&P 500 losses since Friday to $1.5 trillion. The Fed's Neil Kashkari says he's glad investors have got the message.
And I was actually happy to see how Chair Powell's Jackson Hole speech was received. You know, people now understand the seriousness of our commitment to getting inflation back down to 2%.
The EU says it's preparing to step into the energy market to dampen costs. That comes as prices plunged the most in months, with Germany saying its fuel stores are filling up faster than planned.
Meanwhile, the UK Chancellor tells Bloomberg he's working on additional measures to help households and businesses with sky-high energy bills.
We know we need to do more because by December, January, and then, of course, into next year, those bills will probably go up further. So I'm preparing options for the new incoming Prime Minister to be able to do even more.
And Egypt's finance minister says talks with the IMF are moving in a reassuring direction, with agreement on reducing the budget deficit to 6% of GDP in the current fiscal year.
Well, it's just gone 8 a.m. across the Emirates. I'm Manis Krani in Dubai.
And I'm Yusuf Gamenei right alongside, and we managed to calibrate our outfits this morning. I want to get to the calibration that is underway in the bond markets, because we are seeing bonds trimming some of the losses at the moment. US 10s at 308.56. Important to note that, of course, the Fed's balance sheet is getting run off in terms of a higher gear, and I want to give you a little bit of color on that. GTV Go for our clients, just a perspective here that the Fed has another card up its sleeve for investors to worry about. QT is going to hit full stride with the Fed shrinking its $9 trillion portfolio, is how TD Securities describes it. The Fed is going to boost its monthly caps for the amount of treasuries on holdings of mortgage-backed securities that it will let mature. So that is to 60 billion and 35 billion, respectively. Now, that wave is going to get set off from the next couple of days, and that is why it is so important for markets this morning. I want to flip the board and get to the FX space. Two standouts for me. One is, yes, dollar strength broadly, but here euro dollar back below parity, and then dollar yen sliding to 140. Traders refocus on the US-Japan divergence. Signs from the options markets are suggesting that there's a renewed bias towards yen weakness. BNP is in the camp that we are going to see the 140 mark. It comes down to interest rate differentials, Manis, as it always does.
Absolutely. The next word of the back quarter could be intervention in FX. Now, where politics and supply collide, it comes in the form of gas prices in Europe. As the EU says, listen, we're 80% full. Poland's 100% full for gas. Italy's 81% full for gas. That took the market down by nearly 17% in one day. Goldman Sachs, however, warned nothing has been resolved. Gas prices will remain elevated, and a cap, which von der Leyen's bringing all the European nations together, a cap on energy, will just encourage people to use more. I talked about politics and supply colliding, so to the oil market. It goes closed bid up by over 4% because here you have supply risks from Libya. And Francisco Blanche at Bank of America talks about a gas crunch causing switching. But Goldman's, of course, we know, put that note out yesterday, buy commodities in the energy space. A puncturing of risk is what recalibrated the equity markets to the tune of $1.5 trillion in 2 days in the United States of America. So the markets were grappling for a pivot from the Fed. That is gone. How do they re-anchor themselves? A little bit better bid this morning. NASDAQ at 12,528, up a third of 1%. Mike Wilson at Morgan Stanley warns the largest threat to this U.S. equity market at the moment is weaker earnings. That is the material risk into the last quarter of the year. Juliet Sally is in Singapore for the roundup on the Asian market. Jules.
Hey, Manus, a little more stability here too after that 2% drop on the regional benchmark index yesterday. You've got the energy players very much well supported and Japan leading gains in the region too on that weak yen. Where we're still seeing weakness though is in these Hong Kong tech players, the China tech players, as investors really try to digest the US-China audit deal. And we're seeing a bit of weakness in the mainland China market too. A really interesting comment coming through from Thailand about how much of an uptick they're seeing in tourism. They're expecting 400 billion baht or $10 billion in tourism revenue by the end of the year. That's lifting tourism stocks, the baht, also baht bonds. And then, of course, let's talk about the big one here, the PBOC fixing the yuan fix stronger for a fifth consecutive day, really just getting aggressive here and how much they're trying to stem weakness in the yuan. It was the second strongest bias for the yuan since surveys began in 2018, 249 pips stronger than the average estimate. And this as we continue to see weakness in this currency. Goldman now joining the bears, saying that the yuan will fall to 7 to the dollar. Manus.
Jules, thank you very much. Let's get a little bit more on the comments from the Minneapolis Fed President Neil Kashkari. Cross over to New York. Our global economics and policy editor Kathleen Hayes is back in situ. So, Kathleen, the headline is Kashkari was glad that the market is listening to a redefined Federal Reserve message.
Well, he certainly did. And he said it very clearly, very succinctly. I don't think he had any doubt about that. And to say it's a redefined message, I think you're partly right and partly maybe kind of siding with the markets. Oh, they're going to pivot. Once the inflation rate, CPI, year over year peaks and starts coming down again, they're going to have to pivot. They can't cause a recession to bring down inflation. They're not going to do that. And I think increasingly, that's the message we've been hearing from the Fed. I will continue to say that Chair Powell, you're seeing him there giving his speech in Jackson Hole. He may have muddied the water a bit by talking about doing everything it takes, but still wanting to get a soft landing. He took that completely off the table. So number one, their message is clear. Number one, investors can realign. And number three, the financial conditions, which is part of the monetary transmission mechanism, can get in step with what the Fed wants to do. They want to bring inflation down. They want to send that message to the market. They want financial conditions to tighten. So they can get this done. The quicker they get it done, the more they upload or front load their rate hikes, the more this message is clearly transmitted, the quicker they're going to be able to get it to do. He said he was glad, in fact, because they don't want to start easing too soon or stop tightening too soon and then let inflation get out of the bag again. There you see Neil Kashkari, President of Minneapolis said. In November of last year, he was super dovish. He was still worried about COVID. And now he is helping to lead the pack towards the higher rate, keeping it going, and maybe even going higher next year than the Fed officials have been signaling. One more thing, September 21st, we won't just get the rate decision 50 or 75. We're going to get the new dots, the new signals on just what the consensus says about how far they're going to go. So there's a lot at stake here, but Neil Kashkari is making it clear. Don't mistake this, you guys. This is what we're doing.
There's sure a lot at stake. Kathleen, really appreciate the analysis. Thanks for that. That's Kathleen Hayes in New York. I want to get to another top story, and that is the European Union, because it is preparing to step into the energy market. The Commission President, Ursula von der Leyen, is basically saying that the short-term intervention will dampen soaring power costs, at least in theory. But eventually, they want to break the link between gas and electricity prices.
Strommarktes. We're going to have to reform the electricity market. Currently, gas dominates the price of the electricity market. Many of you know there's different sources of energy, but gas dominates and marks the price. That's been the case for a long time. But with these exorbitantly high gas prices, we're going to have to decouple.
Those comments came as European energy prices plunged yesterday after Germany said it was ahead of schedule on its fuel storage plan. Let's get more with our energy reporter, Steven Stepczynski. Stephen, I listened to the French Prime Minister who hours ago warned that France Inc., so firms in France, are going to face energy rationing in the near term. How is this plan going to salvage the little supply that's left?
You know, unfortunately, this kind of plan doesn't really salvage supply or reduce demand. It provides a lot of relief for consumers, no doubt. It will help households and businesses weather the storm. It will help people who need to buy wholesale electricity, like the power retailers, survive to live another day. But when you put price caps on the market, you're not really going to reduce demand, and that's what needs to be done. So, of course, this is a two-pronged approach. There will be, to some degree, it looks like a price cap. Maybe they're going to try to decouple gas. Maybe they'll do some very temporary measures to stop the price of gas from weighing into the electricity rates as much. At the same time, the government has been clear that they want to reduce demand by 15% through March compared to the previous year. Now, doing that, you have to encourage different companies. You have to encourage households, you have to encourage industries to reduce their demand. And a worst case scenario is you just ration it. You stop providing that gas to industries. And that is an option that all the governments are looking at, and they're trying to create the policies. But in terms of the price cap and the relief for consumers, the details for that are still very unclear. There are different ways you can do it. There are some people who are more worried about it than others. And we'll probably get more details about that in the next few days and weeks.
Yeah, and Goldman Sachs, of course, point out that if you have the energy caps, you're going to aggravate the shortages and people just use more. And then, of course, you've got the systemic risk if you intervene in a free market pricing regime. Stephen, thank you very much. Stephen Stepczynski there in Singapore. Well, we have a new survey suggesting American firms' optimism about China has fallen to a record low, with Xi Jinping's COVID-0 policy top of the concerns. Let's get to our China economy editor, James Mega, in Beijing. So, James, this is about confidence in a major economy over the next 5 years. And this has consequences for capital flows, hasn't it?
That's right. We're already seeing weakening investment from American firms into China. You know, people already said earlier in the year as Shanghai was locked down that they were postponing investment. They were putting things on hold because they weren't sure what the outlook was going to be. And obviously, you know, a lot of American firms were shut down in Shanghai during the lockdown there. And now we're seeing that overall American firms are less confident in the next 5 years for China. 51% of firms said they were confident. They're optimistic about the next 5 years in China, which is the lowest it's been since the U.S.-China Business Council has been surveying for this. And it really is going to affect flows from U.S. firms into China. And also, you know, the Chinese government does want these kind of capital flows. They do want high-tech manufacturing investment to help them move up the value chain. And so it's really going to affect their industrial policy goals as well.
Excellent reporting on an important developing story out of China with our expert there, James Mager, the China economy editor. I want to get to the first word headlines for you from around the world and get back out to Jules in Singapore.
Thanks, Yusuf. The U.S. Justice Department says it has already screened documents seized from former President Trump's Florida home for attorney-client privilege. That potentially casts doubt on Trump's lawsuit seeking third-party review of the records. Authorities say a limited set of material may contain privileged information. Trump sued to seek a new review by a so-called special master. Pakistan has secured a bailout from the International Monetary Fund. It averts an imminent default as political turmoil and deadly flooding threaten the nation's economy. The IMF says Pakistan can withdraw about $1.16 billion of its special drawing rights. The funds will be key to stabilising the economy after surging energy costs stoked Asia's second fastest inflation. Singapore is overhauling visa rules to attract foreign workers and ease a tight labour market that is adding to wage and price pressures. From January, foreigners earning more than $21,000 a month can get a 5-year work pass, which also allows their dependents to seek employment. The government says it wants to cement Singapore's position as a global talent hub. And NASA has delayed the debut launch of its latest moon rocket due to an issue with one of its engines. The space agency says the earliest available opportunity to try again is this Friday, but no decision has been made on rescheduling. The Artemis mission will be the first major flight in NASA's ambitious plan to send the first woman and the first person of colour to the moon as early as 2025.
This is a brand new rocket. It's not going to fly until it's ready. There are millions of components of this rocket and its systems. Needless to say, the complexity is daunting when you bring it all into the focus of a countdown.
Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Yusuf.
Thanks. Let's get you all a bit of a snapshot of what else is to come in the pipeline. We're going to be talking Egypt with Arqam Capital's Zena Risk, as the nation's finance minister says that talks with the IMF are moving in a reassuring direction.
But up before that, Standard Chartered's Eric Robertson is in the house. What did he make of Neil Kashkari's comments? How much pain must we all endure? He joins us next. This is Bloomberg.
Coal is the single biggest contributor to climate change. It is not only bad for the climate, it's also really bad for public health. The Beyond Coal campaign is convening businesses, cities, and mayors together to take actions. We are on the right track. So far, the US Beyond Coal campaign has closed down over 65% of all the coal farms in the US, more than half in Europe. We know coal's days are numbered.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
Ken Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
I certainly was not excited to see the stock market rallying after our last Federal Open Market Committee meeting, because I know how committed we all are to getting inflation down, and I somehow think the markets were misunderstanding that. And I was actually happy to see how Chair Powell's Jackson Hole speech was received. You know, people now understand the seriousness of our commitment to getting inflation back down to 2%.
The Fed's Neil Kashkari talking to Bloomberg's Odd Lots podcast there. His comments come after the S&P 500 lost $1.5 trillion over the last two sessions. Let's bring in Eric Robertson. He's the Managing Director and Global Head of Research at Standard Chartered Bank. Eric, I look at the balance sheet reality and the quantitative tightening that still needs to go up to full speed. GTV Go for our clients. It's a chart I used at the top. It's a chart I bring back now. Are you preparing for another leg lower in risk assets once QT gets up to full speed in the next couple of days?
I think that's absolutely right. We turned
pretty cautious on risky assets again in the week before the Jackson Hole conference. And part of the reason is, as you say, the acceleration in asset disposal from the Fed's balance sheet. That has yet to really hit the market yet. So I think that's an important factor that's going to be a headwind to asset prices.
Has that yet to be put into the price of the dollar? We were talking about this sort of renewed bid to the dollar yesterday on the back of a reappraisal of where the Fed goes. But have we yet to understand the impact of QT on a stronger dollar?
I think partially. I mean, it's certainly not going to surprise the markets. The Fed has been very transparent about its schedule for shrinking the balance sheet, so I don't think it's a surprise or a shock. But as you say, I think the magnitude of that balance sheet shrinkage has been quite slow so far, and with the acceleration that we're expecting in September and into the end of the year, I think that will continue to support the dollar.
What about seasonality? To what extent is that going to play a factor? Because let's face it, September and October, they've been horrendous historically for stock markets. Is that going to be the other factor that's going to drive some of the market action?
Well, I think that will always play a factor in investors' minds, but I think what's much more relevant for us is the fact that we have oil prices back above 100, European natural gas prices flirting with that 300 level. There's a confluence of, shall we say, negative factors that I think are all hitting the market at the same time, and that's timing with the September seasonal that you talked about.
Look, we got a little bit of reprieve yesterday in terms of what Europe will do on the gas prices. Correct. We don't know what format that is, and we can pump that forever. The one thing that struck me on the way in this morning, dollar yen towards 140. Euro sub parity. So Korean won tanking and rate hikes. Will the last quarter of this year be much more about FX intervention, perhaps, than we presume at the moment?
Well, look, this currency theme is really important because historically people will say, well, a weaker currency should be good for those exporting economies, right? The problem is, in the current inflationary environment, a weak currency just exacerbates your inflation problem. So I do think you're starting to see some evidence of policy officials saying, look, this currency move is becoming too fast. We've seen commentary out of Korea. We've seen commentary and behavior out of China. I think you're going to see more of that. Will it be explicit intervention? I think that's unproven yet.
The euro vulnerability is truly tangible, and at the same time, there is speculation that the ECB could get more aggressive with some of its rate hikes by year end. Let's listen in to the ECB chief economist, because he spoke a few hours ago, and here's what he had to say.
The inflation rate now is high. It's extremely high compared to the target, and that kind of cyclical distance, even if you're fully confident over time inflation will return to 2%, there is essentially an adjustment phase there, which is a lot of this inflation has been unexpected.
What does the House view at Standard Chartered on how this ECB is going to reassert its credibility to markets?
Well, you make a good point. I mean, they have been among the last of the central banks to start to get more aggressive with their policy tightening. We expect a few more 50 basis point rate hikes going into the end of the year, but that still leaves their policy rate extremely low relative to the level of inflation. So I think where you will see a number of central banks pausing by the end of the year, I think the big question mark is whether the ECB needs to continue hiking rates into next year to get this inflation problem under control.
I think that's very inextricably linked to where this energy cap comes out. One of the big note this morning was the Chinese. The PBOC have gone for the second strongest fixing in the history of fixings. Now, look, UBS, Goldman Sachs, everybody, you can throw your hat in the ring at over 7 if you want. What I'm more interested in is the risk to China, confidence crumbling, capital outflows. Is there a material risk to the yuan, and do you think it will reprice more aggressively beyond 7?
I don't think it will price aggressively. And our view, I think, is a little out of consensus relative to what you just described. Look, we know the challenges that China is facing, whether it's the slowdown in growth and manufacturing because of COVID-related lockdowns. Trade is still a net positive for China, right? Now, you can say that that's because of a decline in imports rather than a surge in exports, but that still means that there are net flows which will be yuan supportive. The current account remains supportive as well. There's no outbound tourism to speak of. And so there are mitigating factors So do we think it will be an explosive move? No, I would actually say it would be well contained here, and there's actually a risk of a stronger yuan going into the end of the year.
There we go. We love a contrarian view. We'll take that. We'll put it up on the web. That's Eric Robertson, our guest this morning with his calls on the markets. Managing Director, Global Head of Research at Standard Chartered right here in Dubai. Plenty more ahead on Daybreak Middle East. This is Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry crossed $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
Let's get to a quick check on the latest business flash headlines from around the world. The Indian tycoon Gautam Adani has become the world's 3rd richest person after his fortune surged to $137.4 billion. It's the first time an Asian person has made it into the top 3 of the Bloomberg Billionaires Index. Adani trails only Elon Musk and Jeff Bezos.
Speaking of Musk, Twitter's former head of security has been subpoenaed by lawyers for both the social media platform and the Tesla CEO. That's after a whistleblower claimed that Twitter lacked concern for privacy issues and had deficiencies in its defenses against hackers.
And trademark filings suggest that Apple may have settled the potential names of its highly anticipated mixed reality headset. Applications are filed in a number of countries for the names Reality One, Reality Pro, Reality Processor. Apple is aiming to release that headset next year. And that is your Bloomberg Business Flash. Let's have a quick snapshot of where we are with risk as we start the trading day. On the commodities front, you're looking at copper again continuing down, the biggest drop in 6 weeks. Aluminium again, all of the concerns around China as they go to try and stabilize the currency. We've just heard from Standard Chartered. They don't think the currency will implode. Iron ore is also under pressure this morning, sub $100, Yusuf. That's a collapse, a work in progress, according to MLive.
Yeah, you know where we are seeing a lot of resilience is in Brent and WTI crude, and that is feeding through into Gulf equity markets. This is the state of play as of the last trading day. At the close, we were lower on the Dubai and Abu Dhabi indexes, but the Saudi Tadal was a little bit higher, yes, barely so, but it outperformed most emerging market equities. We saw Rajhi Bank, Alimna Bank, and the Sabi Agri-Nutrients lead the gains. The gauge is up 11% so far this year, and we'll see how the market trades a little bit later today.
Let's have a look at U.S. equity futures. We've just had Eric Robertson here from Standard Chartered saying, look, they were neutral before Jackson Hole, but they have seriously scaled back their risk. Stocks are a little bit better bid. We've given back $1.5 trillion in 2 days. JP Morgan Asset Management say stay overweight U.S. and international value.
DK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
On Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
We think that's the next secular shift.
From businesses most influential and instrumental.
Yes, it's about renewables.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Daybreak Middle East. Our top stories this morning.
U.S. stocks stabilize as the S&P faced losses of $1.5 trillion since Friday. The Fed's Neil Kashkari says he's glad investors have got the message.
And I was actually happy to see how Chair Powell's Jackson Hole speech was received. You know, people now understand the seriousness of our commitment to getting inflation back down to 2%.
The EU says it's preparing to step into the energy market to dampen costs. That as prices plunged the most in months. Germany's saying its fuel stores are filling up faster than planned.
Meanwhile, the UK Chancellor tells Bloomberg he's working on additional measures to help households and businesses with sky-high energy bills.
We know we need to do more because by December, January, and then, of course, into next year, those bills will probably go up further. So I'm preparing options for the new incoming Prime Minister to be able to do even more.
And Egypt's finance minister has finally given an update, saying that talks with the IMF are moving in a reassuring direction, with an agreement on reducing the budget deficit to 6% of GDP in the current fiscal year.
Let's see how these markets are faring this morning in Asia. Juliet Salih's with us. So, Jules, the PBOC, they're fighting the good fight in the FX market, but tech has been the wreck of the week so far. What's your estimate?
Yeah, absolutely. It matters. The Hang Seng Tech Index on that lunch break, certainly a drag on the overall regional benchmark index, but we are seeing a little bit more of a brighter session than what we saw yesterday when we had that more than 2% drop coming through from stocks. So you can see the likes of Japan, Indonesia and India having some pretty good green shoots today. But when you talk about the tech stocks story, that is still something that is weighing on investor minds as we continue to see the outflow of the US-China audit delisting moves, and Hong Kong tech stocks are certainly under quite a bit of pressure today. We're also watching other moves in the currency markets. We had an update from Thailand. They're seeing quite a strong pickup in terms of tourism and expecting revenue for the second half to come in at $10 billion as they are starting to see the effect of revenge tourism there. That is lifting the likes of Thai baht bonds, but you are seeing a little bit of weakness in the currency at 36.4 to the dollar. And when it comes to the bond market, also a little bit more calm here today, seeing the short end in Australia, yields dropping there after some quite significant rises yesterday, Yusuf.
Jules, I want to stay with some of the currency calls because Goldman Sachs is joining the yuan bears. What impact are we seeing after what has been another strong fix from the PBOC?
Yeah, and the China Daily kind of called this before we saw it happening, saying you can certainly see that authorities are not happy with the weakness in the yuan, which pushed past 6.9 to the dollar yesterday for the first time since August 2020. And despite this stronger fix for a fifth session, we are still seeing weakness in both the on and offshore. Goldman, as you say, joining the likes of the Bears, UBS, Jefferies that we heard last week, pushing for 7 to the dollar by the end of the year. But let's have a look at my chart, because it's really just showing the impact of this move to try and stabilize the currency. We are seeing the appeal of the yuan carry versus the US dollar now negative, the lowest in more than 10 years, meaning that the interest earned by holding the yuan may not justify its risks. Yusuf.
Costs are mounting. Jules, fantastic roundup. Thanks for that. That's Juliet Saleh there. I want to get back to this part of the world. Egypt's finance minister, he has spoken and he has shared a few updates about the state of talks for a deal with the IMF. So you've got the size of the package that has yet to be decided. There's been agreement on reducing the budget deficit to 6% of GDP in the current fiscal year. And he also underscored that the debt situation is under control. Let's bring in Zina Risk, who is well placed to comment on this. She's the executive director of fixed income asset management at Alarcom Capital. Zina, the finance minister talked about everything except what investors wanted to hear most about, which is clarity on what they're going to do with the currency. Is this going to cut it?
I think that they will require FX flexibility. Definitely, it's going to come. Another thing is to control the trade deficit, given the deterioration in the current FX reserves. I also think that there will be more pressure on pressing forward with the structural reform coming from competitive gain, improved governance, and improved productivity.
We had Carla Slim with us yesterday, and she didn't think there was going to be any sort of great explosion, another massive devaluation. She certainly wouldn't pin it down in time. But from a bond investor's point of view, from a fixed income point of view, what needs to be that FX story to entice foreign flows in size back to this market?
I mean, the first step in the FX devaluation is going to cause negative pressure on the balance sheet, because the cost of financing the debt is going to become higher than it used to be. But for the FX and for the credit to be comfortable with what's happening is that for the devaluation to happen and for the currency to reflect the current state of the economy. At that point, it would make sense for us to step back in.
With the growing hawkishness we're seeing from the Fed, there is concern that the dollar strength is going to continue for the remainder of this year. This is a huge problem for the rest of the world, and especially some of the vulnerable emerging markets. Where within the Middle East and North Africa are you finding arbitrage opportunities that can deliver reliable returns for investors in the current climate?
Given the overall negative macro picture, what we're doing is we're avoiding this dollar volatility and any other volatility that is happening in the market. And we're preferring to go into IG regional risk, which obviously does not have to deal with this.
Now, what caught my eye was BlackRock are worried about an explosion in developed market US high yield. They're concerned about the risk. What caught my eye in your notes is you quite like the short end of high yield. We put the two of them in the GTV library, which shows both the US and the GCC sort of high yield. So just talk me through your thesis on why BlackRock are a little bit more concerned than you are.
So basically, I wouldn't be not concerned about high yield, but I'm very selective as to which names we're comfortable with, low refinancing risk that offer significant yield, 4 to 5 years. I think.
So you want to be at the shorter end of high yield as opposed to the
absolutely, and very selective. I wouldn't go in general. I would go in specific names that we like. Take the example of the regional names, the sovereigns. They are very good. They're high yield. They have a very good fundamental improving story, and they offer a very good cushion in the face of any volatility. Plus, given oil where it is, it's still very sportive.
What is your view on the situation in Turkey? Because we had some economic data out. The interest rates continue to surprise investors on the wrong end of the spectrum. There's a lack of political visibility. Are you continuing to stay on the sidelines on this trade? Or is there a certain range where you say, you know what, this is getting attractive for investors, for our clients?
Absolutely staying on the sidelines. The shift now happened because personal spending was front-loaded, given the high inflation, which in turn exacerbate inflation. The central bank 100% basis points cut also exacerbates inflation and puts negative pressure on the currency. So we remain on the sidelines as long as this continues.
What would need to change for you to get back in?
The monetary policy, obviously. It has to become not counter-cyclical and inflation to get back in hand.
You've mentioned currency twice in two of the most volatile markets, bond markets, and you've yet to pin down as to what Egyptian pound would reflect a point where you would step back in, and on the lira, where does the lira need to depreciate, in a percentage terms, depreciate to encourage, because there are very few foreign owners actively positioned in this Turkish bond market?
Talks are different as to what would currently reflect, but some say it has to go as far as 25 for it to reflect it. Some say just 22. I think within that range, the big depreciation would have happened and we would step back in.
Is it time to look beyond just sort of the Middle East focus that a lot of your work relies on, and maybe look at opportunities in LATAM and in Asia? What are you seeing in terms of spreads, in terms of contrast within the space?
Basically, what we're doing, we are looking into oil exporters, obviously. Our focus remain in the region for now, but you don't really need to go exotic in terms of what you're buying, given that for now, given the high list of known unknowns that are in the market, we'd rather not venture into new markets, stay in our own market that give us good return and shield us from the risk.
Stay within borders.
I'm sold. Are you sold? I'm sold.
I need all the return I can get at the moment. I don't own the pension statement anymore. It's too catatonic. Zaina, thank you very much. Zaina Risk there. Very latest on the fixed income markets. Director of Fixed Income Asset Management over at Arkham Capital. Plenty more ahead on Daybreak Middle East. This is Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
In Iraq, protesters have stormed government palace and clashed with security forces. That after a powerful Shiite cleric said he's leaving politics. News reports say at least 15 protesters have been killed. Simone Foxman is with us in Dubai for these couple of days. So what's driving this narrative at the moment, and what do we know so far? What are the details?
Well, the UN is calling this an extremely dangerous escalation of the political unrest we've seen over the past couple of weeks. These protesters are supporters of Muqtada al-Sadr. He's an important Shia cleric that won the most votes in the last election but was unable to form a government. He resigned from the parliament, and he's been calling for new elections. And it's really unclear what else other than new elections would stop the momentum here, because these protests have just been escalating over the past couple of weeks, and now we've seen violence. You know, the thing is, markets are really not focused on this this at the moment because there haven't been disruptions to oil supply. But can you imagine the kind of impact that we would see on the oil markets, these very tight oil markets, if we were to see disruptions from OPEC's second largest oil producer?
Yeah, only in the last 2 or 3 months was there a growing sense that Iraq might be onto something in terms of temporary stability. This is a huge setback for that process. I take you to Pakistan as well, where we've seen these floods, devastating images, killed more than 1,000 people. The IMF has stepped in now, and they've approved a little bit of assistance. Is that really going to be enough, though, given the size of the economy?
You know, they've approved $1.2 billion, and this is a good start because the government needs to come up with $1.7 billion in funding needs by the end of the year. This couldn't come at a more crucial time for Pakistan's economy, but there are so many other factors to worry about right now, and that may be really what's being reflected in the bond markets. We're seeing bonds for 2031 trading at 58 cents on the dollar, even though they've improved as the likelihood of this IMF bailout became clear. You know, 3 other major concerns. One, we've seen this drastic flooding over the past couple of months since monsoon season began, some 1,000 people losing their lives and $10 billion in damage. So Pakistan's going to need to find a way to come up with that money. We see inflation of 25% based on food and fuel, and then political uncertainty, the threat that elections may have to be held before next August, and then that could affect the IMF aid package. The one good thing that Pakistan really has going is some of the support we've seen from Gulf countries, the UAE, Saudi Arabia, and Qatar, some $9 billion in investments and loans that are expected to be going in the country, and that actually may be the thing that's more helpful.
Yeah, but you're still looking at 30 million people across Pakistan who have been displaced, and I think the climate minister calling it a climate catastrophe, and the images are very, very potent. Look, one day there will be a deal between Iran and the rest of the world powers to the JCPOA. The question is, are you going to make that call? Will it be this week? What's the advance or the retreat on the story?
I mean, it seems like there's going to be a deal in the future. We're entering this final chapter, but it's still unclear if you listen to watchers of what we've seen over the past couple of years. The latest updates really have to do with the timing of a potential return to the nuclear deal because they're tied to an investigation of enriched uranium particles that the UN's atomic watchdog found in places where Iran said there weren't nuclear sites. Iran has not cooperated with that investigation, but it's a sticking point for the U.S., the EU, the UN, and it could be that we see some sense of where the probe goes when the IAEA's board of directors meets the week starting September 12th. That pushes us out for a potential revival of the deal several weeks, even though it seemed like just recently we were talking about a matter of days.
Market will be looking for more clarity in the coming weeks. Simone, absolutely. Thank you very much for all the analysis. That's Simone Foxman here with us in the studio in Dubai. I want to stay with the region and get to some of the market action in terms of equities. Our expert Farah Al-Bahrawi joins us. So let's start off with Saudi stocks. Managed tiny gain. I mentioned it earlier a little bit. What drove some of the pricing action?
Well, it was a little bit surprising, Yusuf, looking at the direction of stocks, at least when Saudi was open, it was very negative. So the only explanation really that investors had to point to was the support from the oil price. Brent was, as it rose, the Tadawul rose yesterday, and as it pulled back a little, the Tadawul would pull back. We did see the banks lead gains, which is no surprise. That's the key sector in Saudi Arabia. But really looking at the index performance last week, it dropped after rising for the previous 5 weeks. So there has been a little bit of profit taking in Saudi Arabia, and maybe just there's a little bit of risk appetite with oil coming back a little bit over those lower levels in the lower 90s that we saw last week and the week before.
Farah, look, we've had a little bit of, I suppose, muted gains in some of the recent IPOs. In Dubai, we've had a whole host going public. So talk to me through a little bit more about who they are and why. What's going to come on the slate? And what are the risks to these IPOs at the moment?
Absolutely. We have a few here in Dubai lining up. We have Empower, has already hired banks. Or Bloomberg reported that at least. And we have Al Ansari Exchange as well. This morning, we just found out about Taaleem Holding, again, announcing an intention for an IPO. So these are a few countries other than those state companies that we already know that Dubai is going to put on the table. You were asking about the risks, Manis. Right now, we were just looking at the performance of IPOs in Saudi Arabia, and they have been lackluster. The deals have been smaller. So investors are probably going to start being picky in Dubai. The performance of the last two IPOs haven't been that stellar in Dubai either. And the dividend yield is going to be a key factor for investors because those juicy returns, they're going to be the most important things for investors, specifically here in Dubai, where the dividend yield has been pretty high.
I mean, one thing's for sure, not many things strike me with fear, like seeing a bill from Empower Cooling Services. Have you seen?
You don't want to know my Empower bill. It's like phenomenal. It's like a vacuum of money. I just floated into the air.
Something to factor in for the IPO for sure. They have quite the monopoly set up here. What are some of the other factors, though, that you're looking out for before the open, Farah?
There have been a couple of other companies in Saudi Arabia that I would like to point some attention towards. We had Sipchem reporting a fire at a facility in Hale City. We're not sure yet of the extent of the damage, or at least it hasn't been reported to the market yet. They did say that it is insured, so maybe the financial impact from those facilities won't be that big, but in terms of production, in terms of output, this is something to keep an eye out on, and that share may be active later on when Saudi opens. Again, at the Saudi Open, keep an eye out for a scientific and medical equipment company. They won a contract from the Ministry of Education for some maintenance for a campus. So that'll be another company to watch, but for the upside. That they expect the financial impact to be in the fourth quarter.
You see, Farah, you can still find news even in the dog days of August. Farah Al-Barahi there, keeping the Middle East news flow alive. Farah, thank you very much. Up next, the UK Chancellor says he is working on additional measures to keep the households and businesses with sky-high energy bills alight. Our interview with Nadeem Zahari, that's next. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The UK Chancellor Nadeem Zahari is in the US to meet the Treasury Secretary Janet Yellen to discuss joint solutions to the cost of living crisis. He told Bloomberg, regardless of who replaces Boris Johnson as Prime Minister, new measures are coming to curb the soaring energy bills.
Putin has worked out that he can use energy, especially gas, as a way of getting back at us, at the British people, Germany and the rest of Europe, through the use of gas supply, and that is something he's weaponized, and we have to remain resilient. The Ukrainian people are facing a really tough time, an illegal invasion of their country. So we have to make sure that back home in the UK, people have the help that they need. So at the moment, we have £37 billion that we've put to work to help people. Everybody will get £400 off their energy bill from October through to December. So that effectively halves the increase that has come through the energy price cap. But we know we need to do more, because by December, January, and then of course into next year, those bills will probably go up further. So I'm preparing options for the new incoming Prime Minister to be able to do even more. And actually, what we've got to do is make sure we work together to make sure that the markets remain functioning and stable. We've got to make sure that we coordinate with our allies, including the United States of America. The reason I'm here partly is obviously to see Secretary Yellen, but also in New York to see the banks. We haven't had a chancellor in New York for a couple of years now, seeing the banks. We have a real opportunity. We've just introduced the Financial Services Bill into Parliament, which helps us take advantage of the Brexit opportunities. The UK economy is pretty resilient. If you look at where we are, unemployment is at a record low. About 75% of people have got a fixed mortgage, but we have to keep an eye on that, because obviously as those...
Are you worried about the housing market?
Of course we are, and we're not complacent. The banks are pretty well capitalized, so we have a resilient economy, but at the same time, we've seen gas prices increase by 13-fold.
Yeah, let's just put that into perspective for a global audience. We're now looking at what was sub £2,000 in general average for energy bills, going up to above £3,500.
That's right.
So £400, as you say, helps knock off that half amount of the increase. But this is still a consumer that is feeling incredibly painful. They're looking at the EU saying, we're promising emergency aid for you right now, the electricity prices, the power prices in Germany, France. How frustrated are you that you can't announce anything now because you are in this interim stage waiting for a new leader?
Well, I did two things when I entered the Treasury on the 5th of July. One was to say, where are we on the $37 billion that we've already announced? My predecessor, Rishi Sunak, had announced. And we are midway through that. You mentioned the £400 for every household. We've got the second tranche of the £650 to the 8 million most vulnerable households. That's also going to come through. If you're a pensioner, you get another £300. If you're disabled, you get another £150. So there's a lot to come for those households that really need that have got no cushion at all. But I also, the moment I walked in, instructed my leadership team to say, look, we know Putin's going to continue to use this. We have to be able to withstand that pressure and send a message back to Mr. Putin that this is not going to work. Therefore, we have to look at every option, at what more we need to do come December and January, and then obviously into next year. And we're working up all the options, so nothing is off the table.
It's the UK Chancellor of the Exchequer, Nadeem Zahawi, speaking with Bloomberg's Caroline Hyde. One of the biggest issues with inflation becoming entrenched is actually the housing component. We had some new data out from the United States. It showed that U.S. rents hit a new record, with Manhattan soaring past $4,200 in August. Even though we did see more than half of U.S. cities with a double-digit rent hike, some belt cities are showing signs of cooling off. So I guess a tale of two cities to play with the language a little bit, Manus?
Yeah, well, the rents in this part of the world up by 20 and 30%. So don't give them any ideas, Yusuf. Let's have a look at the currency board this morning. The dollar is just trying to stabilize. I mean, it's had that adrenaline shot, but the real news flow is on the second record tightening by the PBOC, trying to grapple with a declining yuan and a declining dollar yen. So you are looking at these massive moves in the Asian currencies. There's cable for you. 117.02. Dr. Martin Malone about sterling in just a moment.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we're seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with their head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Danny Berger in London with Manish Craney in Dubai, and these are the stories that set your agenda.
Message received. U.S. markets fall for a second day as Wall Street digests Jay Powell's warnings. The Fed's Neil Kashkari says it's a sign investors are listening.
And I was actually happy to see how Chair Powell's Jackson Hole speech was received. You know, people now understand the seriousness of our commitment to getting inflation back down to 2%.
Intervention intention. The European Union considers decoupling gas and electricity prices ahead of an emergency energy meeting in Brussels. Meanwhile, the UK Chancellor tells Bloomberg he's working on additional measures to help households and businesses with sky-high energy bills.
We know we need to do more because by December, January, and then, of course, into next year, those bills will probably go up further. So I'm preparing options for the new incoming Prime Minister to be able to do even more.
Danny, it took $1.5 trillion of an equity market implosion to get the Fed to say, look, we're glad you're listening. I just wonder how much more pain these markets have got to take to sate the Fed.
Yeah, stocks have clearly gotten the message, but perhaps not fully capitulated, if I can start using that word already, Manis, this early in the morning. We are seeing a more settled market today, though. Let me get into the futures session so far. European stocks futures, those up 0.6%. Of course, the UK was closed yesterday. Welcome everyone back to the bank holiday. We're down about 0.25% for FTSE 100 futures, so watch that perhaps continue to be the negative one today. S&P 500 futures and NASDAQ, both those are up. NASDAQ up more, of course, it had sold off harder, but there is still light positioning among professionals, Manis. So this might mean there could be more pain, or perhaps we don't need to add to the downside given that we're already pretty short and that the VIX is still sub 30, Manis. It is this stubborn volatility which refuses to nudge higher.
You robbed me. I hope you showed that as rate and not as a percentage change, as you so often berate me. Let me take you through the rest. Let me take you through the rest of the risk. I'm showing yesterday's movement in European gas futures because it's where politics and supply collide to take this market down by nearly 20%. What will the cap mean? Goldman Sachs say you put in a cap, it just encourages people to use more. It's not a solution. Energy prices, gas prices will remain elevated, according to them. Euro dollar nips back above parity on the back of the tanking in energy prices. Will that endure because the dollar remains utterly resplendent, as it were? That adrenaline shot continues in the dollar. NYMEX crude down 0.4%. And copper, I thought we'd just do a quick genuflection to the metals market. The steepest drop in 6 weeks. People are genuinely worried about China and capital flows, as you see, the currency imploding and the PBOC reacting. More of that from the reporters around the world. Stephen Stupczynski will take us through the latest energy plans. What are they? Enda Curran, as always, through the latest reactions to Jackson Hole, Danny.
We also have Juliet Sally, as always, to break down the Asia market moves. But let's start with that energy story, Manis. The EU is preparing to step into the energy market. Commission President Ursula von der Leyen says short-term intervention will dampen soaring power costs. For more, let's get to Stephen Stupczynski, our energy reporter from Bloomberg. I mean, Stephen, we have von der Leyen talking about the need to separate the high gas prices from power prices. How would they even do that?
Not very easily. It's a difficult situation. There are a few different options. You know, gas right now is one of the most expensive forms of producing electricity. Renewable energy is much cheaper. You know, while it does cost a bit to build a solar farm or a wind facility, when that electricity is being produced, it is essentially at a very low cost. Nuclear power is also much cheaper. Now, in these wholesale markets, generally utilities will sell the highest price electricity to make the most profit and then save the rest, the cheaper stuff, for their own customers. Now, they're going to try to reverse that. And the fact of the matter is, when it comes to just capitalism and the way that electricity markets work, there's a merit order, and upsetting that merit order is going to take some sort of regulation, some sort of rules, and it depends on, do you put a price cap on gas itself? How do you ration electricity to make sure that the right people are getting it, the ones that you want to get it? Our industry is going to have to pay more. There are a lot of different mechanisms that they could do, but right now it's very unclear. We'll know more details in the next few days and weeks, but before then, the market's going to remain very volatile because who knows what will happen in the future.
And you've got to consider the second round effects. If you intervene in the structure of a market, people have hedged, people have no hedges. What are the second round effects in terms of the major utilities? Nationalisation of certain companies in Germany and in France. Second round effects, Stephen, that is the black swan event maybe of our time. Stephen Stupczynski on the energy market, of course, migrating from grey to black. Now, there are sharp losses. They're seen in the wake of the Fed Chair Powell's speech, indicating investors have finally got his message. That's according to the Minneapolis Fed President Neel Kashkari. Speaking to Bloomberg, Kashkari added that it shows how firm the Fed's commitment to getting inflation back down to 2% is. Enda Curran is with us. So, Enda, of course, there is this, line from Kashkari that he's happy to see the markets essentially taking Jay Powell seriously. That's my read.
Really striking language from Neel Kashkari, especially when you remember Manis. He was once considered a dove, but this time he's out there saying he was unhappy to see the markets rally in July. He was happy to see the markets come off in response to Chairman Powell's speech. He warned that the Fed will not repeat the mistake of the 1970s when they began to ease up too soon. And he said he doesn't want to see the Fed stop raising rates until inflation is licked. It's as striking as language as you could imagine from any Fed official. And I think it does just drive home how determined the Fed are now in unison together to keep ramming home this message to markets that they're not going to stop raising interest rates until, of course, inflation is well back down to within their comfort zone, closer to their mandate. And we're starting to see that play out in markets. We're starting to see it play out in global markets too, as the realisation of what the Fed is doing starts to sink in.
Yeah, it does feel like he just stopped short of saying that he wants markets to go down, that they need to go down. Enda, thanks so much. Enda Curran, our chief Asia economics correspondent in Hong Kong. Well, China has once again intervened to try and stem its weakening currency. So let's get to the latest moves from Juliet Sally in Singapore. Jules.
Hey, Danny. Yeah, we are looking at my chart here with the PBOC setting the strongest yuan fix since 2019. Actually, 249 pips stronger than what we were expecting in the estimate. And that was the second strongest that we have seen since this surveys began in 2018. So really just showing that authorities are not happy with this weakness in the currency. It's all about the diverging interest rates between the Fed and the PBOC stimulus. And of course, we're continuing to see the dollar rise too. So the onshore and offshore yuan both past 6.9 to the dollar for the first time since August 2020. Goldman Sachs joining the likes of the yuan bears, UBS, Jefferies, Bank of America that we all heard from last week, calling for 7 to the dollar by the end of the year. Let's have a look at what we are seeing though in broad Asia market moves. It is a little bit more of a stable day than yesterday, being led by some gains in Japan, but you've still got this concern about the overall China economy and of course the tech players. The US-China audit story really weighing into the Hang Seng Tech Index. It has been down by as much as 3% in the session. And Manus, you know I'm never very far away from a reopening story. The Thai government saying they're expecting tourism revenue in the second half, 400 billion baht, that's $10 billion, as they continue to see revenge tourism. You've got a bit of a weaker baht, but we're certainly seeing tourism stocks and baht bonds rallying today. Manus.
Jules, I'll see you in Thailand. I think I've got another 6 days leave. I'm very happy to chill on a beach in Thailand with you. So get the passport out, change up the dollars. See you on the beach.
Count me in.
Sally there, keeping it real. And of course, we can bring Danny too. And do you know what? Bring the family, bring everybody. Revenge Tourism is live on Daybreak. What show am I on? Daybreak Europe. OK, we got a new survey. It suggests American firms' optimism about China has fallen to a record low. A little bit more brevity here. Xi Jinping's COVID-0 policy is the top concern. So let's get to Colin Murphy. He's in Beijing. Colin, good to have you with us. This has got some serious consequences, hasn't it, this survey? First of all, tell me how doom-laden is it, and what does it mean?
So I think maybe the main takeaway is to see how the concerns over COVID have become actually the #1 concern for US businesses in China, taking over geopolitics. And even within COVID, there's two separate areas that they were surveying. And one was COVID as it impacts lockdowns, which of course we continue to see here in China, but also the restrictions on travel. So that means that the executives cannot come in to visit their branches here, cannot come in to see their factories and make plans for the future.
Does this mean then we'll see an exodus of U.S. business from China, Colin?
Well, one thing that they mentioned in the survey, which is of over 100 companies here, is that they're continuing to see profitability here. So that's sort of a point to bear in mind, that their operations still are profitable here. Whether that will go on this year or not to the same degree, of course, remains to be seen. So I don't think we'll see an exodus, but what we will see is increasing difficulty to bring in and attract especially foreign talent, which is in many industries still required to bridge the talent gap between the local marketplace here and what's required to continue to push out top of the range products and services. So attracting people, of course, keeping the people that are here is also problematic. So I think it is a big headache for the organizations here, the foreign companies here, how to resolve that and how to do that in a speedy way.
Colin, thank you very much. Bloomberg's Colin Murphy there. All right, let's get you set up for the day. Look at some of the key things we're going to be watching out for. 10 a.m. UK time, we're going to have this month's Euro area confidence surveys. Then the CPI readings take off, Manus. 1 p.m., we're going to have Germany.
Absolutely. 3 p.m., US Conference Board Consumer Confidence Survey. Later in the day, ECB Governing Council member Robert Holtzmann will be among the guests speaking on inflation. That's at Altbach Forum in Austria. And later in the day, we're going to have the New York Fed President John Williams speaking at an event hosted by the Wall Street Journal. How much pain will he endorse in risk markets as Kashkari did? The New York Fed speaks. We really got to listen. Danny.
We certainly do. And what does our next guest think about that? Is he listening? Coming up, we're going to be speaking to Smead Capital Management CIO and founder Bill Smead on markets.
Plus, the UK Chancellor Nadhim Zahawi speaks to Bloomberg, telling us the new measures are coming to curb soaring energy bills, regardless of who replaces Boris Johnson as UK Prime Minister. More on the story in this show. This is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
I certainly was not excited to see the stock market rallying after our last Federal Open Market Committee meeting, because I know how committed we all are to getting inflation down, and I somehow think the markets were misunderstanding that. And I was actually happy to see how Chair Powell's Jackson Hole speech was received. You know, people now understand the seriousness of our commitment to getting inflation back down to 2%.
That's the Minneapolis Fed President Neel Kashkari there speaking to Bloomberg for our Odd Lots podcast. Well, joining Manus and me now is Bill Smead, CIO of Smead Capital Management. And Bill, Kashkari there stopping short, essentially, of saying that they want markets to sell off. He didn't say that. He did say, though, that the markets are now listening to the Fed. What are you hearing, Bill, from the Fed? Is this a market environment where you do not want to be holding risk?
Well, we always are taking the risk of owning good quality common stocks. It's just what are you going to own and how are you going to make your money? The Fed is a year to year and a half behind where they need to be. We're in a very similar period to the 1970s, where the demographics in the United States, the amount of federal funds that have been sprinkled into the system before they started tightening credit, and a lack of goods and labor at attractive prices. And we have got what we used to call demand pull and cost push inflation, and that's what we studied in college in the late 1970s.
So, Bill, tell me this. They're a year and a half, they're, what, $1 short and a day late. So how much more aggressive do they need to get on rates? Is raising rates the answer? Because every Nobel laureate that appeared on this show 10 days ago said Fed's got it wrong. Raising rates is not the cure.
Well, the history is that the Federal Reserve has got to raise the Fed funds rate above the inflation rate. And for them to talk about 2% coming from, 8 to 10 it's outlandish. It wasn't just about the price of oil and gas. Laborers that were making $12 an hour are being paid $18 an hour in the United States. That's for fast food positions. God only knows what they're paying cooks. So this is an interesting economic environment where people in the average and below average incomes are going to benefit greatly from this inflation because their incomes are going to go up faster. But billionaires that own tech stocks are going to get less wealthy.
Okay, well, I mean, Bill, look, there's an argument to be said that, cost of things like food, of like gas, are becoming more expensive for the normal person. People have talked about this in the way of a K-shaped recovery. But, Bill, I want to take all of what you're saying and put this into your investment thesis. You sound very skeptical as to where monetary policy is heading from here. What does that mean for your portfolio, though?
Well, in the 1970s, you wanted to be in the oil business. When a scarcity develops, you are going to see higher prices. The body politic on both sides of the ocean would like to see a quick transition to clean energy. But as Elon Musk said, it was today in the States, it was yesterday for you folks, he said, we're going to need oil and gas for decades. And that's not the way it's priced. Those are the cheapest stocks with the fastest earnings growth. And the expensive stocks have slowing economic growth. The two are going to meet in the middle somewhere. I don't want to be sitting around with a 60 times earnings stock or a 30 times earnings stock that's on its way to a 20 multiple. And that is what happened. So and remember, do not forget we had a financial euphoria episode over the last couple of years with everything from FANGs and memes and Pelotons and Beyond Meats and that largesse of money. The money the Fed created just got thrown at everything that could walk and talk and chew gum.
So that's a great saying, everything can walk and talk and chew gum. So with that in mind, a rabid Fed, a quantitative tightening, I take it then as a broad brush, you'd be a seller of growth and a buyer of value. And if so, beyond oil, where is the value?
Well, land is. This is a great irony. We're actually bullish on the home builders because once the United States population gets very dissatisfied with owning common stocks, which they will, right? U.S. households have never owned as large a percentage of their net worth in common stocks as they did a year ago. When they get dissatisfied, that they will turn away from common stocks and they'll turn toward the thing that they're the most likely to create wealth in over their lifetime, which is home ownership. And we have 92 million millennials that decided it's a good idea to own a home. Now the challenge is getting them to spread themselves geographically across the United States. I wouldn't be surprised the same thing's going on, for example, in England. I was there for a wedding a few months ago up north of London, and there's a lot of land there that you could build houses on.
And Bill, you didn't stop by and say hi. I'm only slightly offended, but look, Bill, I do gotta wonder, devastated. But I do gotta wonder. Okay, so it's this this trend you're talking about in terms of generational wealth, buying houses. But are you not concerned that this aggressive push by the Fed to tighten financial conditions in some way is targeted at a hot housing market, that we're going to see some cooling because of the push the Fed is making?
There is a chart that we have that goes back 60 years. The three biggest home building, that single family home building booms in the United States were 1972, 1978, and 1984. The interest rate, the mortgage interest rate, was dramatically higher than right now in all three of those. But what there was way more baby boomers than the prior generation that wanted and needed a house. Stocks did poorly. Inflation ran high. For the average American household, the best defense against inflation is to be your own landlord.
Okay, well, let's see whether America, even the baby boomers, Bill, it's been a while since they paid a mortgage at 6%, hasn't it? And it was 50% cheaper just over a year ago. I'll leave you with that thought, Bill, because I've lived through a few cycles in housing myself. Bill Smead, CIO at Smead Capital Management there, and I'm not calling 2008 again. Okay, so what have we got? Danny, a little bit of breaking news coming from the German economy minister. This is about, of course, Ursula von der Leyen is talking about gathering everybody together on the European stage to deal with the energy crisis. Freeloaders should not be excluded from a German gas levy. This is Mr. Habeck. He says a gas levy is needed. He's the energy minister there. And he's talking about freeloaders. I'm not quite sure what he means by freeloaders should be excluded from a German gas levy. But this is the beginning of the European verbiage, isn't it?
Yeah, it is. Of course, he's speaking in a local radio interview there. And yes, Manus, as you said, we heard from Ursula von der Leyen yesterday talking about the need to disconnect the price of nat gas and of power. There have been a lot of questions of how they will do this. Perhaps Habeck suggesting a levy is part of the steps. But coming up, Manus, we're going to dive deeper into that because, of course, the cost of power surging past €1,000 per megawatt hour. We're going to discuss the options that top officials such as Habeck, such as von der Leyen, are discussing. That's next. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
COVID has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living.